It is and it has. In fact, I was having a discussion the other day about a lot of brokers are launching some of the new crypto products, and I was actually on a chat show with someone. He says, "Well, why are they putting Dogecoin and Shiba on their platforms?" And I said, "Well, it's the same as the trader, called FOMO, fear of missing out. It's not just the trader that has fear of missing out; it's the broker. I mean, if they don't have Dogecoin on their platform, then they're going to go somewhere else. So, and with all these exciting, I don't know if Vlad would call that an alternative asset, things like Shiba and Dogecoin and whatever, that really that may or may not have any purpose in this world. For a broker or an exchange to be offering this, they really still have to be following regulations. So, they have no choice but to be transparent. I mean, we could go on a rant about right now about people like Robinhood, and we're both Canadian. We've seen the how things are done differently in North America, and it's actually a bit funny watching the what's been happening with Robinhood. From the other side of the world, though, I think it shows you that obviously the UK, Europe, Australia, and various other places like that are far more advanced in their retail trading, and I think everything is still transparent. You can't, as you know, in forex, you don't have an exchange, so you're relying on faking the volume, but there's really no as a broker, that you have to report everything you do, every single trade, every single client, every single conversation. You have to keep track of, because the regulators require it.
Yeah, well, for me, I'd say the way we look at things is, I guess, I wouldn't say it's fear of missing out. I'd say over the past 3, 4 years, 5 years, we've kind of seen traders kind of come and go, and understanding where traders are going in terms of that, in that respect, is we're kind of thinking, where's the next generation of traders going to come from? And all of a sudden, with COVID and everything, we've seen a spike in new traders, like more traders than we could have ever imagined coming into the market. But there's a difference between institutional traders and retail traders, and on the retail side, yeah, you want to give them everything that they want and stuff like that. You got to capture their attention and get them, because right now on the flip side of things, you have all these cryptocurrency brokers or exchanges that are now offering currencies to trade and everything like that. So the industry is kind of getting, it's topsy-turvy. It's like, okay, they're coming into your space, they're going into your space, and all of a sudden, next thing you know, if you don't add those things, all of a sudden you're going to have all these cryptocurrency exchanges offering currencies, and then they're going to offer other sorts of derivatives and things like that. So if you don't go into that space and offer those products, then all of a sudden you just become obsolete in some regards. So fear of missing out, I don't know. I think it's just a natural evolution where you have to, if you can offer those different asset classes and pairs, I think you got to keep the interest of the audience wherever they're going. And more from our side, the target, where we're really looking at on the crypto CFDs is we want to focus on Bitcoin, Ethereum, some of those major ones, and we want to attract some of those crypto hedge funds and stuff like that, and because really whatever those crypto funds are doing currently is they're just saying, you don't want to buy cryptocurrency and worry about the holding the coins inside your wallets and dealing with all that stuff. Why don't you invest with us, and we'll buy for you? And really, most of their strategies are buy and hold, as opposed to or maybe they're cost averaging. Oh, it's going down, we're going to cost average and continue to keep buying, and maybe they sell a little bit here or there. But with CFDs, we offer a convenient way for them to hedge out their portfolios on the downside risk without having to sell their Bitcoin here or there. So, and as well as if they were to go to the futures exchange, they have to deal with contracts rolling over, turning over. There might not be the leverage component that's easily accessible for them. So for us, that's kind of the idea that we're looking at is, okay, you have a crypto portfolio. How do you hedge the downside risk? CFDs are definitely one option. And then you can definitely buy on the upside as well. So you can capture both sides with the crypto CFDs. Vlad,